I talked to a guy the other day, and his son was in college, and he was trying to get a degree in AI, and he knew more than professors.
Welcome to the Enterprise CTO Podcast. I'm your host, Shawn Walchef, and today I am interviewing my co-host, Jim Balis. Jim Balis is the partner and head of strategic operations at CapitalSpring. More importantly, he has been on this journey of this Enterprise CTO podcast with me. When I started this show, I reached out to our network, and we are very lucky and blessed to have done over 1,500 interviews of restaurateurs, technology professionals, hospitality enthusiasts, and we've got a great network. And the number one recommendation from people that I know, like, and trust was you've got to talk to Jim Balis. And the irony is I pitched Jim Balis, who is extremely busy doing very important work for CapitalSpring and on behalf of the restaurant brands. I pitched him this crazy idea to have a conversation about enterprise chief technology and how does technology get purchased? What are the decisions that get made and what are the impacts? And we're talking about brands that have typically over 100 units or more. And Jim was so gracious to come on the show. But the best part is I've never got to interview Jim specifically. So Jim, welcome to your own show.
Thank you. Thank you. Can I just interview myself and you could just go off
you can
camera?
Interview yourself. Jim, let's add some value to the audience. If you're new and you're listening, thank you. We appreciate it. This is deep work for us. We care about this industry deeply. Jim, for the people that don't know Jim Balis, can you give us an idea? What does your day-to-day look like? You're in the Delta Lounge now, so you're flying. That's how busy you are, is you're taking a podcast from the Delta Lounge.
Yeah, I mean, I'm pretty much on the road every week. So everybody says, where you're based out of, and I usually just respond Delta Airlines. Because most often I'm on a flight somewhere. I'm in a Delta club. I'm in an airport. I'm in transit. I'm in an Uber. But I split up my time a few different ways. I try to find the next great brand that we're going to invest in. So searching for those and networking to try to find great businesses and partners for our investment opportunities. So I spend quite a bit of time there. Great example is going to Florida tomorrow to visit with a group that's doing some phenomenal work. In the fast casual space, I spend a bunch of time doing diligence on opportunities we're considering. And then, of course, the hard part, once we invest in something, is actually create value from the investment. I joke with our finance teams, it's easy to structure a transaction. It's hard to make it worth something after we close. So a lot of work with, our portfolio partners on, trying to create value for their businesses. We invest a lot with founders, and they're great founders, they're great businesses, but they typically haven't had a lot of experience scaling businesses. And so helping them scale, teaching them how to build the infrastructure to support the growth, how to find great new markets if we want to expand into new markets. Four-wall, I grew up in the restaurant business. I started as a dishwasher when I was 14, so I know the operations side really well. So trying to work with them on the operations side to see if there's four-wall opportunities, all that kind of stuff. That's my average day.
Tell me about a brand in the past that you bring me into the discovery process. Like, how do you find great operations? Like, when do you know? Not from a business standpoint, but from a gut standpoint.
Yeah, I mean, I always start with, why does a brand need to exist? And once I kind of figure that out and then make the determination, okay, I know why it needs to exist. Now, how does it exist? And what's the competitive landscape look like? And what kind of moat do they have to the extent they have one? And, a lot of that is gut. Some of it's obviously performance, right? One of the businesses that I'm talking to next week, they're doing, 5 or 6 million out of 1,800, 2,000 square feet, right? So that's obviously somebody punching above their weight class, and a situation where the economics sort of speak for themselves. but they're in one market. How does it translate? They've been there a long time, so maybe they just have a ton of brand equity and they know the community. So there is some gut associated with it. But I usually start with that basic criteria and then go from there. But there's tons of great brands out there, 4, 5, 3 units that have great opportunities, and it's great to try to go find them. And you look at Stripes, right? They invested in Pop-Up Bagel when they had one store.
Yeah.
And somehow had that gut feeling that this is going to be a fantastic brand, and obviously they were right. So I don't quite have that magic touch.
What is your definition or CapitalSpring's definition of enterprise? What's the location count?
I mean, anything probably 3 to 4 units or more. We have invested in smaller businesses, and we've obviously invested in bigger businesses. But anything 3 to 4 is probably the minimum. People always ask, what's the minimum unit count? It's really more about the economics of the business and the EBITDA. A lot of times the challenge we run into with smaller businesses is, with the back office, support center, G&A, and so forth, that, the businesses actually don't produce a profit, or they're burning, cash. And we do need to invest in businesses that are profitable at the end of the day. So, sometimes we can sort of work with, depending on how much they've invested in the corporate office, or maybe they're paying themselves big salaries. We can kind of navigate that, but it's more about the profitability of the business and the unit count.
What kind of investments have you made in restaurant brands that are 100 locations or more?
I mean, so Sizzling Platter, is the first one that comes to mind. That was a multi-branded franchisee business. We invested in 2019, and I actually stepped into the CEO role right at the beginning of 2020, I believe it was. And at the time we had 380 locations, plus or minus. And then, we sold that to Bain Capital right around a year ago, in July of last year. And we were closing in on the 900 mark, and we had added, I think, 3 or 4 more brands to the portfolio. So that was one of our larger investments.
At the drive-thru, small changes add up fast. A few cents here and there across thousands of orders, and you're talking real money. Recently, we ran a full-cycle experiment with a national QSR brand using Checkmate digital menu boards, side by side against the baseline. Same stores, same time frame, and in just 30 days, average check size increased by nearly $1. That's about a 6% lift. No extra labor, no slower lines, just digital menu boards surfacing the right add-ons and offers at the right moment. If you want your menu working as hard as your team does, learn more at itsacheckmate.com.
When you're evaluating restaurant companies, is it a problem to have too little technology or to have so much technology that is disconnected?
I mean, I think, on the emerging brand side, the smaller brands, I think they're typically starved of technology, or they're starved of integrations. They have a few different technologies they're utilizing. It's really not communicating well together. And then on the larger scale, it's interesting, some of our larger investments, they're constantly changing providers, vendors. And a lot of times I try to guide them and say, try to just get more out of the vendor you're with, because, you're switching, there's a transition period, things fall through the cracks. There's just so many reasons why it's oftentimes not a great idea for, one more feature to go change to a new platform. And then we're also out there vetting, I probably have 3 or 4 calls a week vetting new platforms, new technologies across, everything, point of sale, labor, I mean, you name it, cost of goods, loyalty, lots of different marketing. Now with AI, there's been a lot of companies out there that are trying to leverage AI. By the way, we should make that a drinking game on our podcast. Anytime somebody says AI, you do a shot of something.
How do you protect your time? Because you are a curious person that's always learning. That you just said 3 to 4 calls a week. How do you protect your time? What makes it worth your time? Is it a recommendation from another leader that you trust?
Yeah, usually it is a recommendation from somebody else that I trust, or I'm reading about something and I say to myself, I was reading on my flight here today, one of the Asian robotics firms is doing something interesting in a specific area that I think has restaurant application to it. So I scheduled a call with them to see if it would translate to restaurants, what they were doing. So sometimes it's my own research. A lot of times it's recommendations from people. Have you heard of this? This guy's launching this product. I mean, randomly, I was in Canada recently looking at a emerging brand opportunity there. And the guy that made the introduction said, hey, I know this guy over here who's actually not even out of Canada, but he has a technology that's super interesting. You should talk to him. Ended up talking to him. We're testing that in one of our portfolio partners. So some of them are a little bit random, but typically they're recommendations from somebody I know.
How do you measure return on investment from a technology investment standpoint?
I mean, sometimes it's easier than others, right? If it's like a cost of goods or a labor platform, the trickier ones are like which loyalty program is better or which one should you go with, right? And what's the return relative to the other competitors out there? Those are trickier. I think, the true measurement is always, what value is it bringing? Is it bringing, some sort of monetary value where, our scheduling is more efficient, our, eco-track, we can track our repairs and maintenance a lot more effectively. And then others is like a time savings mechanism, where it's saving our managers time. We use across our portfolio, I don't know if I've shared this before, but we use a reporting platform called Chavi, and it's probably in 75% of our portfolios, and it's bringing in data from our payroll provider, our point of sale system, all of our online review, whether we're using Sprout or, some of the other online review aggregators. It's bringing in that data. It's bringing in our COGS data. It has our ERP system. And so, at any point in time, I can look at it and say, okay, because I always look for correlations of data because correlations drive action, right? If two things are correlated, there's an action to be taken associated with it. And so I can look at turnover against performance against Google reviews to see if there's a correlation between turnover and performance of the business. And, I can layer in check average to see if it's affecting check average or traffic counts. And then if there's a correlation, I know that I can invest in improving turnover because I know what the cost of it is. It's costing me negative trends in the performance of the business, right? And, usually that's training. It's training typically, we've learned that the more somebody's trained, the less they're likely to leave. So how much can I invest in that training? Well, I know now because I know what the cost of the turnover is. So that's a situation where you have this data aggregator, right? And I know what it costs per month, but it's bringing me all this great data that I'm now dissecting. And so there's a return, but it's not until I figure out where that correlation exists and what action can be taken against it. So, sometimes it's easier than others, but that's typically, it's either a time or it's a dollar.
Yeah, I think, as the more that I do this type of work and, have conversations with some of the greatest technology innovators in our space and operators and great restaurateurs, technology is such a funny thing because when it works, it removes a problem and we forget all about the problem and we go on to the next problem. I was like, I'll share an example. Just this last week, we were doing some content for Post and we were talking about handhelds and the power of handhelds. And just by filming in our restaurant, I was close to a server station. That server station used to be on an NFL Sunday. As a restaurant owner, I go, where are my servers? And they were waiting in line to put an order into the point of sale in the server station. So it's like, the running joke as a restaurant, where's your servers? Well, they're waiting to put the order in. Well, when Toast comes out with a handheld, now all of a sudden that server isn't waiting in line. Instead, they're at the table taking the order. But then we have this server station that, from a real estate standpoint, well, we can take down the wall and we can add another table. There's different things that we can do, but we forget all about it. We forget that when we went from paper tickets to a kitchen display screen, we just take the kitchen display screen for granted. And it's hard for us to quantify, well, what was it like when we had a lost ticket, right?
Yeah, the handhelds have been a game changer, obviously, and it's been interesting to see the fine dining adoption. It was much slower to fruition, but I think what's happened is over time, it's similar to the QR code introduction during the pandemic, where nobody ever used it pre-pandemic, or it was kind of extraneous, and then all of a sudden it became mainstream, right? I think, as more and more brands in the below fine dining space start using handhelds, all of a sudden, some of these, C-suite executives said, well, maybe I can use it at my high-end steakhouse because, it's really not viewed as a negative to hospitality. And, oh, by the way, I got my drink 10x faster.
Yeah.
Right. So there's a benefit to me as a guest in the restaurant. So the handhelds have been an interesting, but, fabulous game changer. It'll be interesting to see, some of the tabletop devices, where you can order or pay. If what happens there, we're starting to see a little bit casual dining specifically. They're becoming more present. I think it's more around payment than people are actually ordering like a second drink or paying for the games anymore because everybody has games on their phones. But that's sort of an extension of the handhelds, like, maybe a pre-handheld device that, interesting to see how the adoption goes.
If you're talking to somebody that is the chief technology officer that's considering coming into this crazy space of restaurants, what advice would you give? I mean, you've seen how much value has changed of, the afterthought of maybe a chief technology officer 20 years ago or 30 years ago to the prioritization where you have someone like Troy Hooper that is working hand in hand. Every CEO has to have a technology conversation.
Yeah, I mean, a CTO that's not in the restaurant space, that's coming into the restaurant space, I would definitely recommend, that they listen to a bunch of your podcasts to learn about the various technologies that have been successful and those that have failed. But I think, spending the first 90 days understanding the tech stack, what it's doing well, what it's not, and then talking to as many people as possible about what their tech stacks are doing well and what they're not. And really understanding the space and what's available. And the other, and it's an effort that we're pursuing right now at the CapitalSpring level, is you almost have to have a dedicated AI person.
Yeah.
Shot. Did you do your shot?
Done. Yes.
You have to have somebody that really knows, that's an expert in that space, and it could be a college grad. I talked to a guy the other day, and his gentleman's son was in college, and he was trying to get a degree in AI, and he knew more than the professors. And so he ended up leaving college, starting his own AI firm, and he's been very successful with it. So finding somebody like that, regardless of age or experience, somebody that's an expert in the space that can really support the efforts. Okay, what can we automate? Where can we bring value with it? I think it's a very important piece of the equation right now. We're going through at the CapitalSpring level, and we have an individual, and we're debating bringing in a second person, but there's really three buckets to it. There's the bucket of, okay, how can I help our firm?
Yeah.
Right? We want to improve our reputation. We have accounting that we have to do, kind of help us with that. We have to report to our investors, can help us with that. So it's like the CapitalSpring level. Then there's the portfolio company level, right? All of our portfolio companies are reporting similarly. Like I said, we're all using Chavi. We're doing these things that are very similar regardless of whether or not we're on NetSuite or Restaurant 365.
Right.
We're still doing accounting reporting, right? There's reconciliations. So what can we automate within the various departments? And so he and I have been going around to our portfolio partners and sitting down with each department head and saying, okay, give us your work stream. What are you doing? we take notes, and we're coming out with a plan on how we're going to deploy for each portfolio company, various ways to like automate, make their lives easier, take away some of the administrative tasks. And then the third bucket is really the most interesting. I'm not sure what we can harness with it, but I have this idea of aggregating, an advantage that we have, we have a few thousand restaurants across our portfolio, multiple brands. Can we take that information, bring it all in? Like one example, is all of our leases, right? We have, businesses that operate in the same markets. They're not competitive, right? They're in different segments. We might have fast food, steakhouse, casual dining restaurant, but, they're all very similar markets. What rent are we paying? What CAM are we paying? What escalations are we paying? And comparing those. So, sort of really trying to data science across our portfolio and trying to bring value. So when somebody says, hey, I'm signing a lease over here, well, we have 5 other leases. Let me tell you what the terms of those are. Yeah. Obviously with confidentiality protections built in, but, are there ways to really harness that set of data across our portfolio? And there's other ways that I have a lot of ideas around that, I don't want to share because I believe they're proprietary. Yeah. So, but I do think some sort of AI expert is an important hire to be part of that team and figuring that out, because that's separate from whatever your tech stack is.
Yeah, I think what's interesting about AI from a leadership standpoint is that each leader in an org, I'm guessing at CapitalSpring, just like at Cali Barbecue Media, just at like Cali Barbecue at my restaurants, I can say you need to use AIs, you need to use Toast IQ, you need to check with ChatGPT or Claude and run this prompt, or take the 7 shifts manager log and make sure before the manager meeting that you've gone through all of our manager notes and the staff logs so that we have a concise action. But until I actually go through the workflow, like you got to do like you got to actually ask the manager, and I've got to have a conversation with Steven about his workflow to see if there's something broken and how can we better implement so that the next week we're just a little bit better. And the week after that, we get a little bit better. That continuous learning, like reviewing the game tape, almost like, what would Tom Brady do? Like he would study the game tape over and over and over and over again.
Yeah. I mean, it's that's so true. And, I think one of the easy wins that I've presented to a number of our portfolio partners that you almost don't have to guide them through is on the marketing side. Yes. It used to be like we would hire food stylists and food photography is, it's something, people give me a hard time because they know it's so important to me. I truly think that people eat their eyes, and, people are so visual, especially the younger generations are sifting through various social media channels. And so, now, and we did an experiment with one of our portfolio partners recently, just took a picture of a product with our iPhone. Yep. And I use Nano Banana. You can use whoever you want, right? And say, okay, sharpen this image to make it high res, right? So that's the first thing you do. And then you say, make a video out of it doing X, Y, and Z. I want a hand grabbing it, dipping it in the sauce. I want a droplet coming off, a ripple in the sauce. I want it to be a female hand that is maybe ethnic, that's married, so there's a wedding ring. Like, you just go through this process of like, with a lot of detail and create a video, and you can create massive amounts of content now. Correct. With your iPhone and not having to hire, and you don't need incredible amount of creativity. It's really been, a very great tool. Yes. And it's eliminated the time and the effort. We would normally have to take 500 food shots and somebody style the food and all of that. And now, you can recreate it so efficiently for pennies with Nano.
Yeah. The advice that I would add on to that is if you're an owner and operator, you're listening to this 100%, that is phenomenal advice. The issue that we run into as operators is everyone goes, well, the menu's too big. How do you eat an elephant one bite at a time? It's figuring out, start with the sandwiches, and let's take a photo. Every Thursday, we're going to bring out the sandwiches, but make it specific too. So a DoorDash photo is different than an Uber Eats photo, is different than your website photo, is different than your Instagram photo. And Nano Banana can do that. You just have to be specific with where you want those stylings for each of those.
Yep, that's fantastic advice. You're exactly right.
Yeah. Jim, before I let you go, what's your number one piece of advice for the restaurant technology founder, CEO, head of sales that's listening to this, that gets the opportunity to pitch enterprise brand when they're pitching their enterprise brand? What advice do you have for them?
I would say have a great deal of situational awareness. Walk in knowing what the issues they're facing, be very specific and sensitive to their time to deliver exactly whatever problem that they need to solve. I think if you do that and you don't go in just with your standard pitch, and you don't look around the room and everybody's looking at their phone by minute 25, right? Have situational awareness. It's so important, regardless of what you're pitching and who you're pitching it to, and just in general. When we have board meetings and I see somebody presenting on my team or somebody with one of our portfolio partners, and I all of a sudden see we've lost everybody's interest, I interrupt with something and I try to get people back on track, because a lot of people don't have it. They just go down their path.
Yeah, the power of research and due diligence, especially in the world of AI. Like, there is no excuse to not come prepared with due diligence on whoever you're talking to, whoever you're pitching. Jim, thank you so much for joining. We appreciate it.
Of course.
We will do our next CTO podcast. Thank you guys for listening. We appreciate it. As always, stay curious, get involved, and don't be afraid to ask for help. Jim, thank you for your time. As always, we appreciate it.
Thanks, Shawn.